Money is a medium of exchange that is commonly accepted in transactions for goods and services. It can take many forms, including paper currency, coins, digital currency, and even precious metals. Money serves as a unit of account, a store of value, and a standard of deferred payment. It plays a crucial role in modern economies by facilitating trade and commerce and enabling individuals to save and invest for the future. The history of money dates back thousands of years, and its use has evolved over time with the development of new technologies and financial systems. The history of money dates back thousands of years and has undergone many changes throughout human civilization. The earliest form of money was likely bartering, where people exchanged goods and services directly with each other. As societies became more complex and trade became more widespread, bartering became less practical, and people began to use commodity money. Commodity money was any object that had intrinsic value and could be used as a medium of exchange. Examples of commodity money include seashells, salt, and precious metals like gold and silver. These items were widely accepted as payment because they were scarce, durable, and easily divisible. Over time, commodity money was replaced by representative money, which was backed by a commodity such as gold or silver. This allowed paper money to be used as a convenient substitute for physical coins or bars of precious metal. In the century, most countries adopted fiat money, which is not backed by any physical commodity, but is instead guaranteed by the government's promise to accept it as payment for tax. Over time, commodity money was replaced by representative money, which was backed by a commodity such as gold or silver. This allowed paper money to be used as a convenient substitute for physical coins or bars of precious metal. In the century, most countries adopted fiat money, which is not backed by any physical commodity, but is instead guaranteed by the government's promise to accept it as payment for tax. This system allows for greater flexibility in monetary policy, but also makes the value of money more dependent on political and economic factors. In recent years, digital currencies like Bitcoin have emerged, which are not backed by any government or physical commodity, but instead rely on complex mathematical algorithms to maintain their value. Overall, the history of money reflects the changing needs and preferences of human societies and the development of new technologies and financial systems. Paper currency is a form of money that is made of paper or polymer materials and is issued by a government or central bank. It is used as a medium of exchange in the same way as physical coins and other forms of currency. The use of paper currency began in China during the Tang dynasty in the century, where merchants would deposit their coins with a trustworthy person and receive a paper receipt in exchange. These receipts could then be used to make purchases or withdraw the original coins. The first true paper currency, known as jiaozi, was introduced during the Song dynasty in the century. This paper currency was issued by the government and could be exchanged for copper coins. Over time, paper currency became more widely used in China and eventually spread to other parts of the world. In the century, European countries began to issue their own paper currency, which was often backed by precious metals such as gold or silver. These banknotes were widely accepted as a convenient alternative to carrying around heavy coins and were more difficult to counterfeit. Today, paper currency is still widely used around the world and has evolved with new technologies. Many countries have moved to polymer banknotes, which are more durable and resistant to counterfeiting than traditional paper currency. Digital currencies and mobile payment systems have also emerged as alternative forms of currency in recent years. Digital currency, also known as cryptocurrency or virtual currency, is a type of currency that exists entirely in electronic form and uses cryptography to secure and verify transactions. It operates independently of any central bank or government, and transactions are recorded on a decentralized public ledger called a blockchain. The first and most well-known digital currency is Bitcoin, which was created by an anonymous person or group known as Satoshi Nakamoto. Bitcoin uses a decentralized system to verify transactions, and new coins are created through a process called mining, which involves using powerful computers to solve complex mathematical equations. Other digital currencies have emerged in recent years, including Ethereum, Litecoin, and Ripple. Each digital currency has its unique features and uses, but they all share the common characteristic of being decentralized and secured through cryptography. Digital currencies offer several advantages over traditional forms of currency. They allow for fast and secure transactions that can be conducted globally without the need for intermediaries such as banks. They also offer a high degree of privacy and anonymity as transactions are recorded on a public ledger, but do not include personal information. However, digital currencies also have several challenges and risks associated with them. They are not widely accepted as payment by merchants, and their value can be highly volatile. Digital currencies are also a target for hackers and scammers, and their use in illegal activities such as money laundering and tax evasion is a concern for regulators. Despite these challenges, the use of digital currencies is growing, and they are likely to play an increasingly important role in the global economy in the future. Despite these challenges, the use of digital currencies is growing, and they are likely to play an increasingly important role in the global economy in the future. Precious metals such as gold, silver, platinum, and palladium have been used as forms of money for centuries. These metals have intrinsic value due to their rarity and usefulness in industry, making them a valuable store of wealth. In the past, precious metals were used as commodity money, meaning that they were directly exchanged for goods and services. Over time, coins made of precious metals were created to make trade and commerce more convenient. These coins were widely accepted as payment because they were scarce, durable, and easily divisible. Today, precious metals continue to be used as a store of wealth and a hedge against inflation and economic uncertainty. They are also traded as investment assets, with investors buying and selling gold and other precious metals as a way to diversify their portfolios. However, the use of precious metals as a form of currency has declined in recent years. Most modern economies use fiat money, which is not backed by any physical commodity, but is instead guaranteed by the government's promise to accept it as payment for tax. Digital currencies like Bitcoin have also emerged as an alternative to traditional forms of currency, including precious metals. A financial system is a complex network of institutions, markets, and instruments that facilitate the flow of funds between savers and borrowers. It includes a range of activities such as banking, investing, insurance, and securities trading. The financial system plays a critical role in the economy by facilitating the allocation of capital and promoting economic growth. It allows savers to invest their money in productive activities such as business expansion, infrastructure development, and research and development. At the same time, it provides borrowers with access to the funds they need to carry out these activities. The financial system is made up of several key components. These include banks, which provide loans and other financial services to individuals and businesses, capital markets, where stocks, bonds, and other securities are traded. Insurance companies, which provide protection against risks such as illness, accidents, and natural disasters, and regulatory agencies, which oversee and enforce the rules and regulations that govern the financial system. In recent years, the financial system has undergone significant changes, driven in large part by technological advancements and globalization. The rise of digital currencies and blockchain technology, for example, has the potential to revolutionize the way financial transactions are conducted. While the increasing interconnectedness of global markets has made it more important than ever to have effective regulatory oversight. Despite these changes, the core functions of the financial system remain the same. It serves as a crucial engine of economic growth and development, providing the necessary capital to fuel innovation and prosperity.